All right. Looks like we're live. Good morning, good afternoon, good evening to all of you, wherever you may be. Clive Thompson is coming on today. He should be here in about 10 minutes or so. And if you're watching this recorded, if you don't want to hear me say hello to everyone, go forward 10 minutes because I usually start the live stream 10 minutes earlier. So we've got Dutch Libertarian. I see he's been here for a while. We got Spock 2024, Darren Smith, um, Hio Silver from Dudley, Jane DR. Good evening, Mario. Great to see you, she says. Yeah, great to see all of you as well. Thank you for coming on the live stream. Andrew Rama says hello, Mario and Clive from Quebec. T. Ryan. Hi, T. Ryan Belly. Dan Sarabia says shalom. Uh, Mark says greetings from Liverpool. And H. Yeah, Rudy is here, but he was chewing something. He'll probably jump on the sofa in a minute. Do you want to come up, Rudy? Come on. Oh, there you go. Here he is, the rascal. Um, who else have we got? Bobby Data, Ant H, Taz from Ireland, Sonny Olofsson. Hi, Sonny. Nice to see you here. MW35, 70 degrees. That's nice weather. It's been fairly mild here today as well. It's pretty nice. I think it rained a lot last night, but not during the day. Yeah, he came out of hiding. Uh, Erastus Turnip Seed from Tennessee. David G. from Alabama. Andrew Watson from Basingstoke. Uh, yeah, Rudy, say hello. Lauren from Connecticut. Silver Beast. So yeah, I think let's see the title that I put for the live stream is Navigating Through a Command Economy. So what I mean by that, unfortunately, is what might happen if things get worse in terms of I'm not saying there will be a World War III or nuclear war because that would be pretty, you can't really prepare for that. But I think all these regional wars are going to get worse, and we're going to be sending a lot more of our treasure, unfortunately, to these countries. So, Silver Beast, Jane, Ricardo Pereira, that sounds like he might be from Brazil. Good evening. Did Rudy already? No, he hasn't dug anything lately. He's been pretty good. Rations, yeah, we're going to talk about that. I think we're already kind of seeing it. We got prepared for it during lockdown, I think, and a lot of the shortages. It seems like it happened by accident, but I don't think these people do anything by accident. William Birkenroad from La Jolla, great place to play golf, La Jolla. I was there many years ago. Black's Beach. RB says, hello, Mario and Rudy. Rudy, you want to go back down? Good boy. Go on the sofa. Come on. Come on. PS says you should interview Whitney Webb. You both have a lot of knowledge about the powers that be. Yeah, I think, yeah, I've listened to her before. My wife listens to her quite a bit, Whitney Webb. She does very good research. Wayne Max says, hi, Mary and Rudy. Finally made a live stream. That's good. Yeah, migrants still coming to Europe and the UK and the USA, and I think that's being done by design. by the governments. Um, it's just very clear that the governments are doing this and they're using our taxpayer money as well. Jack, Jock Mahone. You should read 180 Degrees. Yeah, a lot of people have been saying that to me. I have a couple of books I'm reading at the moment, so I have to finish them. I always read quite a few books at the same time. Hannah says they've got snow, so no golf today. I think a lot of the courses were closed today because of all the rain last night. Rumpelstiltskin from the land of the rising sun is here. Yeah, the migrants, I think I'm not sure, there's a lot of speculation what what the objective is. One of them is, I think, to dilute the local culture, the national culture. I think that could be definitely it. In the US, it could be for political reasons. Most of these people are coming with nothing, um, and they've been given a lot of stuff, and that's welfare or socialism. So they'll probably vote Democrat. Waymack, have you looked at the gold confiscation in the UK in 1914? I know a gold standard was eventually temporarily restored. They didn't confiscate. I don't think they confiscated gold in 1914, from what I've read. They just didn't make, if you had a lot of pound Bank of England notes, banknotes, you couldn't redeem them for gold anymore. They went off a gold standard, but I don't think they confiscated the gold. Yeah. But I'll have a look. You could be right. I could be wrong, and I didn't dig deep enough. And a lot of people talk about the Bradbury pound, which was when the UK Treasury issued uh, pounds without borrowing. Eventually, they had to pay it back. And people say, "Oh, we should go back to a Bradbury pound," but I don't think it's a solution because that was done because of the war emergency. And uh, I still believe that. Free market money is the best way forward. And the only reason the Bradbury pound looks good is because it was for an emergency. In the normal world, I guess it's difficult to say that these days. Um, there wouldn't be a Bradbury pound. Slavakino Rafi's, he came last week. We've got Clive this week. So kind of alternate. Maybe one day, one weekend, we'll have both together. Uh, Belly Dance Raver says thumbs up. Yep. Bobby Data thinks no private homes or private farms. It's possible the farm situation is, I think, what they're gunning for that. That's why we're seeing all the protests in Europe because they want to destroy the small farmers so that the big corporations can own all the farms and they can plant whatever they want. Uh, it's not going to be healthy, in my opinion, but hopefully they won't succeed. Hi, Linda Adrid. Nice to see you here. Darren Smith, Neil D. Evening, Mary, another day in paradise. Yeah, that's the other thing. We're being bombarded with so much, you know, they're trying to keep us like in crisis mode. It's almost like they want to keep us um scared, and if it's not climate change, it's war or a pandemic, and Putin and China, Taiwan, and at the same time, our currencies are collapsing in purchasing power. They want to focus on all these things, and they don't want you to look at the fact that the currency is collapsing. And I think that's the whole that's the important part for me, because I think if you are able to put some of your savings away in real money, you might be able, and I say you might, I don't say you will, you might be able to get through this and maybe even thrive. Uh, Hi, Clive.
Hello, good evening, Mario.
How are you?
Hey, it's a nice day here. We've been up in the mountains in Montana. There's still some snow up in the mountains, so my little boy's been up there
Hmm.
skiing very nicely.
That's good. Montana, I never, I don't think ever skied there, but I played golf there quite a lot. They have a nice golf course. They have a big tournament there. Yeah,
Yeah. So in the winter, the golf course turns into a ski resort.
yeah, I know. Yeah. So, Clive, the title today is Navigating Through a Command Economy. I thought that would sound a little less, alarmist, instead of a war economy, because I think we're going more and more in that direction, even if I mean, I think if there is a major war between the major powers, we have to, I don't know how to prepare for that, because that would be very serious. But I just think that we're going to continue to see all these regional conflicts, and they're going to basically be proxy wars between the West, Russia, and China. So I thought na talking about this and how it would affect the economy would be a good thing, because you kind of caught the tail end of some kind of command economy. Maybe not, but your parents definitely did here in England.
Yep. After the Second World War, goods were in short supply, and everybody had ration coupons, which meant it didn't really matter how rich you were, but you had to accompany your money. When you bought a pound of butter, you had to have a ration coupon to go with it. Likewise for petrol, a ration coupon went with the petrol. So that was all sort of coming to an end as I was a child. But then I remember there was this oil crisis. It was the 1970s, and they suddenly reissued ration books and ration coupons to everybody again. Although, in fact, I don't think they ever got to be used the second time around. But that was the way they kind of stopped people hoarding goods because it didn't matter how rich you were, you couldn't get your hands on goods unless you happened to have a ration coupon to go with your money.
Yeah, I think my mother-in-law, she's what, 90, she's going to be 92 this year. She's spoken about the rationing. Well, she was evacuated during World War II, but also in the 50s there was rationing. And even my brother-in-law in Switzerland, his mother told me a story about, even in Switzerland there was rationing, and there was a black market for stuff that you could, some people, the black markets always seem to evolve.
Yeah, well, black markets always exist. Anytime someone tries to restrict something which is in demand, there will be a black market for that. I mean, I recollect that in the early years, in the 1970s, early 70s, when I went abroad to countries in Europe, there were basically two exchange rates wherever you went. There was the exchange rate you could get in a bank, and there was the exchange rate you could get from the man in the street. And if you're smart enough and didn't get ripped off by them giving you some currency which wasn't relevant to the current country, you could get a lot more currency for your money by changing it on the black market.
Yeah, I just found here, some people might think talking about rationing is a bit silly, but as not that long ago, 1973. For me, it's not that long ago because I remember 1973. Some of you, of course, might not. It says United States gasoline ration stamps printed but not used during. So they did the same thing in the US, like you're saying. So
Mhm.
today it could be some kind of digital um, ration.
Well, that's exactly the way it works. If we have the central bank digital currency, the CBDC, they won't need to give us Russian coupons because the CBDCs will be totally programmable, and you will discover that you can. If there's no rationing, no problem. But if they start to ration, you'll be able to spend your CBDCs only up to a limit on certain items, and you'll only be able to do certain things. So uh, potentially there could be the control of the population through the CBDC, which will be programmable.
Yeah, and Clive, before we go further, I just wanted to tell the viewers if they're interested in reading what Clive writes about, they can connect with him on LinkedIn, Clive Thompson. We usually say that at the end, and a lot of times there people are gone by the end. And I see you've got that book over your right shoulder there, illegal.
Yeah, yes, I'm looking forward to writing a little article about it. As you've read it, Mario, it's the story of how the U.S. government spent many millions of dollars hunting down a $20 coin, which was stolen from the Treasury or from the Mint about 70 years ago. It was 1937, so yeah, that'd be about
33.
yeah, about 80 years, 80, 90 years ago. And they literally spent millions of dollars chasing around the world looking for a $20 coin.
Yes, the 1933 Double Eagle. I recommend it's by is it David Tripp, his name? Illegal Tender.
I don't see the author's name. That's
It's at the
interesting.
bottom. It's the bottom and the front there. It
Oh,
says
yes, David Tripp. Yes, you're right.
with two P's. The story of the that book is that for some reason I had two of them, and I said, Clive, I'm going to send you that. So I posted it to Clive in Switzerland. Uh, Good thing the post is still working. It might have taken a little long, but it got there. Yeah, a really good book, a good story, and one of the reasons why they were going after this 1933 double eagle is because Roosevelt made gold illegal in 1933, but the people at the Philadelphia Mint didn't, they still minted the coins they shouldn't have. I think they minted I don't know how many, and some people at the mint they stole them because they knew they would be quite valuable because and I think it was 20 of them. And eventually they found this London dealer, which I've met. If you go to all the coin, you know, I think it's called Knightsbridge coins. I forgot Fenton, isn't it?
Yep.
He bought the coin, but it used to be owned by the King of Egypt. And then yeah, he had to write a check for $20 to the U.S. Treasury, didn't he? That's how much they.
Well, I haven't got to that particular bit yet,
Oh,
but I've got to the bit where he's now just acquired the coin,
yeah.
and he's very suspicious that it's part of the coins which were confiscated from the King of Egypt when he was deposed.
Yeah.
But it's a grey area.
Well, talking about coins, Clive, and for the people here in the UK, I bought this the other day. It's a really great magazine if you're interested in numismatics. It's nice to have. I don't buy magazines that much, but
Hmm.
anymore. But it's really good. It's not cheap. Magazines now are like almost £5. Or is it £4 75? But it's really good. It's got nice articles and a lot of stuff about coins. Uh, yeah, back to the command economy, Clive. The other thing that I was thinking, and people may think whatever they want, but I think the people in power, but people behind the scenes, they know a lot more than, let's say, Rishi Sunak or Joe Biden or Janet Yellen. And I think they know what's going on in terms of the, bond yields and all the debt and that they have a problem. And I think one of the reasons they might be pushing us to more and more conflict is this year. This is the 10-year yield. We'd been in a bull market in prices since the early 80s. And you don't even have to be a technical analyst or even know about markets, maybe to look at this chart and see that something's wrong here, that we just like this trend, of downward yields and interest rates, which has made, this everything bubble that we've had since the 80s, where the Dow has gone from like 800 to almost 40,000. The NASDAQ, you know, is flown is what, like, I don't know, 15, 16,000. and the S&P is like 5,000. And we've got, all the derivatives, all the housing as well, real estate prices. To me, it seems like the party is over. And, if they can only justify in doing more printing and more QE to stop that with a major
Sure.
crisis, because if there wasn't a major crisis, people would say, well, you're going to destroy the currency. So, um, and if you look back, Clive, and I'll let you comment in a second, but if you look back at World War II here, 1940, well, I know it started in 39, but the US joined it in 41. Up until like the early 50s, there's what they call yield curve control, which is kind of QE. They have to do QE in that if the yield goes above 2.5, they have to start buying to keep it there. At some point, I guess the market won't test that because they'll know that the Fed will come in, and so they don't have to do QE. So they kept that here. What's your view of that theory that I have?
Um, Well, there's quite a lot of things in there. Let's just talk about first of all, you mentioned the word crisis. When we have a problem in the economy globally, historically, it's been a good idea to start a war somewhere, as far as the powers that be. And I fear, and I fear we're heading that direction. I hope we are not. Obviously, a war would be it's relatively good for the economy at the end of the day, and it's relatively good for the gold price, but it's not what I wish for. But it does seem that the powers that be are hankering for some sort of conflict to take the public's eye off the domestic problems of a slowing economy and rising inflation. Now, let's go back to the bonds that you mentioned. The US government, according to its latest budget, which was just published, I think maybe today or yesterday, in the last few days anyway, they published the February 2024 budget for the next 10 years. At least it's a projection. You can see that the plan, if you look at that, is to spend more money than they planned last time around. So the spending is going up. They also anticipate collecting more taxes, funnily enough, but it goes without saying that the gap between what they're going to spend and what they're going to collect in taxes will get bigger and bigger, meaning that the budget deficit will get bigger and bigger. And the consequence of that is the government has to borrow the money to pay for the difference. So they're borrowing at a time when the national debt has reached an all-time record, not only in absolute terms, it's 34 trillion, but it's also an all-time record in terms of the GDP as a percentage of GDP of the country. And that figure, according to their own budget, is set to continue to rise um, at a fairly accelerated pace, far too fast for liking. It's well over 100% of debt to GDP ratio, which is a figure which is way too high to be sustainable. That figure is going to go up. So the trouble is they're going to have to borrow this money in a market which is already saturated, which is already getting indigestion with debt. So that does mean that if they're going to borrow from the public, the interest rate has to be higher because the public will not have the money to put into government bonds unless they're tempted by a higher interest rate. So there's two things which could happen here. One, the interest rates could spiral out of control, and I don't think that's necessarily going to happen, because if it starts to happen, the Federal Reserve will do its duty. And I say that with inverted commas because it's supposed to be independent, but they'll do its duty and they'll start doing exactly what you described, Mario, which is yield curve control, which means they basically will start buying the bonds and printing money, because that's how you buy. When the Federal Reserve has got two sides of the balance sheet, the money is the liability side, and the bonds it buys are the asset side. So if it's to buy bonds, it prints money to buy those bonds. And of course, on the day that happens, that will be perceived as a major pivot and a major change of policy by the Federal Reserve, which has up until now said it's doing QT, quantitative tightening, which means that it's going to let what they mean at the moment is some of the bonds will run off and mature, and they won't reinvest some of that money back into new bonds. If they switch to a situation where they are net buyers of bonds, that will be a major and very significant move as far as the global markets are concerned. And we'll see if that does happen, we'll see a massive melt up in all asset prices, gold, equities, and anything else that is people can trade. And that would actually include the government bonds, because if you've got the government, if you've got the Federal Reserve buying the bonds, you're underpinned and you don't have any risk anymore. But Suddenly, the need for the government to borrow money does mean that interest rates get on the bond market will get forced higher over time until the Federal Reserve steps in and starts buying those bonds.
Yeah.
Uh, just
I,
go on, Maria.
Sorry, yeah, and I think the people who would lose out would be, the bottom 50% of the people who have almost no assets, and you can look that up on um,
Yep.
the Fed's wealth distribution data, Federal Reserve Board. I just got the balance sheet up here, and I mean, it will be interesting to see. On Thursday, they publish last week's day numbers, but for the last 2 weeks, it's actually gone up a little bit, the balance sheet. It has done that before in the past, but if it continues to stabilize or even go up a bit, it could be saying that they're about to pivot here in terms of the balance sheet. And the other thing that is ta showing, and I subscribe to the FT, and I don't like the FT, but sometimes you need to, know what these people are saying. And someone wrote here, NATO has no choice but to strengthen its bulwarks against Putin. Well, that means more money, to try to get rid of Putin. And NATO chief warns Europe cannot deter Russia without U.S. help. And I'm not saying the Americans should give any money to help Europe, but that seems to be the agenda right now.
Well, I mean, if you look at the share prices of the various defense companies, and there's a lot of them, you'll see they're all rising and continue to rise. And if you look at the news flow from the defense companies, you'll see that they're getting order after order after order for more bombs, for more jet fighters, for more vehicles, for more this, for more that. The military company, the military manufacturing companies are doing extremely well. Um, and I put one of them into one of the portfolios that I publish on LinkedIn sometimes, and that one is one of the best performers this year. And the reason is simply they make military vehicles, and yeah, they're getting more and more orders because these military vehicles are getting blown up, and they need more of them.
Well, the BAE Systems, it's the biggest defense contractor in Europe, UK based. And since the beginning of the war here in February 2022, it's gone from £5.97. In the UK, the share price is quoted in pence. So it's £5 pounds 97 is now 12 and a half. So yeah,
Yeah,
I'm
well, I must admit I'm a shareholder in BAE System, BAE, which I bought quite some time ago, and I haven't traded it. I'm quite happy in it. It's not in one of my recommended portfolios, but I'm very pleased that it's going in the right direction at the moment, but obviously for the wrong reasons.
yeah, and I mean, it's your it's up to you, of course, to have those shares, or I'm not telling people don't buy it or anything, but personally, I'm not involved. One company that I think it might be worth looking into, and I bought a little bit a couple of weeks ago, is Newmont Mining. It's got almost 5% yield now. And did you see, Clive, that I think it was Stan Druckenmiller? He sold a lot of his
Yep.
um, tech stocks, and he's buying Newmont Barrick, and he's getting into
So
precious.
he's one of the most renowned investment managers in the world, very, very successful, knows what he's doing, and he's shifting from the higher growth stocks into the doldrum stocks, which basically are the mining stocks. Let's face it, the whole gold mining sector is very much in the doldrums at the moment. People have literally abandoned it.
Mm.
But it's incredibly cheap when you think that gold is near as makes no difference at a record level. Yet the if you look at the gold miners, they're where, for example, Barrick. It's I think it's the lowest price I don't know how many years. And I think Newmont is well down. But the gold miners in general, they're way, way down compared with where they should be, given that gold price is knocking on the record levels. And probably people have taken their eye off the ball from gold in the last few weeks because, of course, Bitcoin is attracting all the attention at the moment. But at
Yeah.
some point, that interest is going to shift to gold, and we've already seen that in the last week or two when gold dipped below 2000 for a few days, and it's now what 2010, 2020. I don't think that those who would normally be bulls of gold haven't even noticed. They're watching something else.
Yeah. Um, Someone's asking here, the if we can speak on the divergence between the spot price of gold and the miners. Yeah, I think the price of gold is above 2000 near all-time highs, and the miners are in the down in the dumps.
Yeah, the miners are half what they were.
Mm,
They're way
Either
too cheap.
I think what it means, either the spot price is overvalued and is going to correct, and it could, anything can happen. But uh, with central banks getting closer and closer to pivoting, I think if anything, we could go higher. So yeah, it says that the miners are very undervalued. Yeah, and maybe there's also the other thing, Clive, that I think the miners are getting hurt by is the geopolitical climate, because a lot of miners have properties all over the world, and the world's getting more and more unhinged. That people could be concerned about nationalization, war. A lot of these mining companies have properties everywhere around the world.
Yeah, I mean, I don't want to give. I'm not giving investment advice to anybody here, but just a factual piece of information. Those who don't know which gold mining companies to buy can buy into the ETFs, which track the gold mining companies. And there's two very well-known gold mining ETFs. And this is not investment advice. One is known as the GDX, which tracks the majors like Barrick Gold and Newmont and a whole bunch of other large mining companies. And the other one is known as GDXJ, which is the
Yeah.
gold mining juniors. And again, this isn't investment advice to go into this, but I just want to say if you don't know what you're doing and you want to be gold miners and you don't want to pick them individually, the way to do it is to buy the ETF.
Yeah, so here's the GDX. This is for the big mining companies. So yeah, back in 2020, when gold was above 2000, it topped at 2070. It was trading around 43, and now we're at 2020, and it's trading at 26. So yeah, I think it's a good way if you want to trade or invest short term to play the gold market. Again, it's not advice. I still believe personally in acquiring, physical gold and silver stacking. Let's have a look at the GDXJ, which is, I
Yeah,
think it's done even worse.
it
The
has done worse.
the junior miners, they will yeah, it's a bit like, silver will underperform gold and the junior miners will underperform the big mining. So back in 2020, when gold was making an all-time high at just above 2000, it was trading at 61 almost. So it's almost half the value of when gold was pretty much where we're now. So yeah, it's interesting.
I mean, Druckenmiller, what's his name? Drucken, that's what his name,
Druckenmiller.
Druckenmiller. He's well respected in the industry, and I think that people will notice what he's doing. And I think that some of the large investment houses will say we should have a bit of exposure to this area because everyone's underweight at the moment.
I'm gonna switch topics here a little bit, Clive. Don't know if you've
Hmm.
seen this. Maybe the US viewers can talk about it. But apparently, the MAGA or Republican, the red people, they're upset with all these lawsuits against Donald Trump. There's one that was really ridiculous the other day, 364 million, and apparently the reason they said it was because of fraud, but from what I understand, I'm not defending Trump. I just think this is crazy. He did a deal with a bank for one of his properties. They valued the property. They lent him the money. He paid all. He serviced the loan, paid it off. Everyone was happy, and now they're saying it was a fraud because he overvalued the property. But everyone tries to get the most for the property that they have, and if they want to borrow on the back of it.
Well, I'm smiling so much, Mario. I was a banker for nearly 50 years, 47 years, something like that. And there was a non-stop stream of people who would come in the door wanting to borrow money against assets which they thought were worth a lot more than what I thought they were worth. Now, I wasn't a lending officer, but I would have been a fool to submit such proposals to my credit committee, uh, knowing full well that they're going to laugh at me when somebody comes in and says this building is worth 1 million when it's worth 500,000 or whatever. No, everybody on the planet, when they want to borrow money from a bank and has some asset which is not priced like a stock, where you can see the price of the market every day, will always say it's worth more, whether it be a painting, whether it be a building, whatever it happens to be, whether it be a cargo of oil. The the borrower will always claim that it's worth a lot more than what you could sell
Yeah.
it for in a bankruptcy situation.
Yeah, in this case, no one complained. The bank didn't complain. The business,
Mm.
I think the deal has been done years ago. But so what's trending here is boycott New York, because these judges are in New York. So I think you see the truck drivers, they're saying they're not going to deliver anything to Manhattan or yeah, New York City. Says I'm a trucker and I stand with the boycott. Time to show the corrupt how show the corrupt we run this country, not them. So this is another interesting thing that could affect, the supply chain, especially for the Northeast.
Yeah, I mean, I think America has become very divided now,
Yeah.
between the Republican and Democrat supporters, and it wouldn't surprise me if for the next decade at some point we have some sort of mini civil wars breaking out in America.
Yeah, I listened to Trump being interviewed by Tucker Carlson last year, and he mentioned that. He said there's too much division, and he's worried as well. So there's the judge who passed, the 355 million fine. So let's see if we've got any questions, Clive. We haven't. So if you guys have any questions or comments about what's happening vis-a-vis the truckers in the States. Um, the gold Trump sneakers are already sold out. Yeah, I saw those. I wouldn't buy one of those. I mean, it's a little bit too much for me. They
Actually,
do.
Mario, I saw right at the beginning, I had it on my, I had your chat before I logged in. I saw somebody was asking about the gold confiscation in England.
Yeah,
Uh,
I
so,
don't think there was one in 1914, was there?
yeah, there was. There was I think they called it the Gold Standard Act of 1914.
Yeah.
And basically required everybody to turn in their gold. That lasted for about 7 or 8 years until 1923 or something like that.
Did they pay them back or?
Um, well, they restored the gold standard
Yeah.
afterwards. So yes, the
Not
answer is
for,
yes.
for about 5 years, I guess. Yeah. Yeah. Churchill was the guy who restored it. He was the chancellor of the exchequer. But instead of revaluing gold, because during World War One, the UK printed a lot of debt for the war. So he went back to the old rate, and that was deflationary because yeah, there's a lot more debt out there than there was gold, and that's why by 1931 it collapsed. So here's the Trump sneakers. So I wonder if it's because it's $399, Clive. I wonder if it's a gold leaf.
Well, I think there's a funny thing in this world today that people are willing to pay crazy prices
Yeah,
for things, and it doesn't really matter anymore what things are worth. And I'm not, it may be a pair of sneakers, but if you want to own it, you're going to pay it.
yeah,
And people have lost. I don't want to say we've lost the values that existed when I was a child, when you had to think very, very carefully how you spent your money.
Mhm.
And it's not I'm not only talking about sneakers now. It's extended to stocks as well. We're seeing on the stock market and in other asset classes, we're seeing some very crazy prices and craziness going on.
Yeah,
Uh, and I'm not saying that one should avoid these asset classes because it's crazy. The question one's got to ask is, are we in a new world where fundamentals don't matter anymore, where what something's worth is irrelevant? It's whether you can have it when everybody else wants it, and I think that's part of the culture now. We saw that with the GameStop fiasco 2 or 3 years ago,
yeah.
when people just said GameStop had no fundamentals, it was worth nothing, and yet they pushed the price was something like $1 to $300 or $600 just for the fun of it.
Yeah, I think it's a symptom of the fact that the currency is almost worthless, and
Well, that's it. There's too much of it. They're printing it like
yeah,
there's no
yeah,
tomorrow, and people have got plenty. Some people, not everybody,
yeah,
because
no,
we're
no, yeah.
we're two worlds here.
Andrew Rama asked, "Do you think if enough people would turn to stacking, this would end the madness by starving the beast?" Yes, I mean I've always said that for years here on the channel, and even before the Silver Squeeze movement in early 2021, I was already telling people years before that the way to starve the banking system and the bankers is first to try to not deal with them as much as possible. I don't borrow if you can, try to keep, yeah, and then stack, instead of saving, putting your money in the bank, you buy gold and silver. And yeah, I've always been for that. Of course, I'm not Tucker Carlson or a big media person, but who knows? Maybe someone big like that will start looking into gold and silver. I see that a lot of alternative people like that used to be like in the mainstream, like Megyn Kelly and others, they're pushing, telling people to buy gold. So yeah, I think that's the only way to really bring the bankers to their knees and make them disciplined if and well, I don't know if they'll ever be disciplined. And it was Warren Buffett's dad, Howard Buffett. He wrote in 1948 that the only way to control, government spending and the bankers is to have gold redeemable money. And unfortunately, we don't have that, but we can actually redeem it de facto, and that's by, buying gold and silver. It's called buying, but you're actually redeeming your notes. It's not at a fixed rate, right, Clive?
Yeah, I mean, I think it makes sense for everybody to stack the gold and silver that they can lay their hands on. Um, I whenever I'm out, I pop into antique shops or secondhand shops or pawn shops and see what they've got. I usually come away empty-handed, but I managed to come away with two things the other day. This is a stack of silver dollars, $1 coins, and
Oh,
there's a
you
few half milk.
you found some silver dollars there, did you?
Yeah, and I also got in the same antique shop a book. Well, it's not.
Oh,
It's a book. It's what they call a coin book. You can put your coins in the book,
oh, nice.
and inside this book there's what they call Liberty Walking Halves, which are silver coins. And you never know. The fun of it is if you're looking for coins, just ask everywhere you go,
Yeah.
and they'll turn up. And it's great fun. You never know what you're going to find. It's a bit of history, and of course, it's underpinned by the silver value. I don't like to pay much more than the silver price, and in these cases, I basically paid a little bit more. But um, the other day, I've got myself some very old coins at a very nice price, and underpinned by the value of the silver. So if the silver price goes up 10 or 20%, which I think it will, I'll be in the money.
Yeah, and the history is really interesting to because I love history and you can learn a lot about the coins. One of the viewers a few years ago sent me the a Danish silver coin. It's the commemorative for Hans Christian Andersen, the children's story author. So that's from the Danish Mint. And
Mm. Mhm.
it's a really oops. It's a really nice coin in there. So. That's nice.
I see one of your listeners or reader viewers asked, "What does Clive think about military investing in military companies or
Yeah, well,
companies
yeah.
which make weapons?" I'll answer that one. I did say I was a shareholder of BAE Systems. They actually make aircraft, ships, and vehicles and electronic communication systems. They don't actually make any bombs, as far as I'm aware. Maybe they do, but I'm not aware of that. But yeah, I'm not a fan of companies which make bombs, and I don't want to encourage that.
Yeah, I mean my father years ago, he died in 98, but he did well in business, but he was in shipping, shipbroker, but someone approached him in Brazil about doing an arms deal. And I think he could have made a lot of money, but he told my sister. My sister told me this because he didn't tell me at the time. He didn't do it because he didn't feel right about doing that. And that's the way I feel about it. But I guess someone could argue, if war picks up and they need more and more silver, we're going to benefit from it from having silver. But the way I look at it is that silver is more like money. Uh, so it depends on the individual. If you feel bad at night sleeping and knowing that this is a situation, I don't feel bad about having the silver because when I started buying silver, I wasn't looking for a war and to make money off it like that. I was looking more as you know, as insurance.
Yeah, the way I see it is we could go into a situation where the banks are closed, where there's a bit of unrest in the political situation, and you can't actually spend your money in the way you'd like to. Uh, but people in such a situation will start to take your silver. They'll learn very, very quickly what a silver coin looks like, what it weighs, how much it's worth. And if that doesn't happen, you can always sell your silver at a later date back into the system. And provided you bought it well, you'll get back what you paid for it and some.
Some overseas demo god, thank you for your super chat. He says Jeffrey Christian on a recent CPM YouTube podcast stated the cost of silver from non-primary silver mines is in the $1.50 range. What are your thoughts on such a number? To be honest, I don't know exactly what the cost of silver is, but from what I've right now, but in the last few years, I've heard people talking about $18, $17, the cost of getting silver out of the ground. And most of the mines, silver mines, there aren't that many silver mines just dedicated to silver. It's like a byproduct of base metals like copper and nickel. So Jeffrey Christian, I know about Jeffrey Christian quite a bit. He used to work for a firm called J. Aaron, which was the precious metals dealing arm of Goldman Sachs. And the guy, his boss was Robert Rubin, who became Treasury Secretary under Clinton. So I don't really. I don't know about Jeff Christian. I think he's got an agenda, unfortunately. His clients are the major central banks, the bullion banks on Wall Street. So yeah, he's always playing down silver. I think that number though is really low. I don't know what he means by non-primary silver mines. I guess he means the ones that are not, that when it's a byproduct of silver of other metals. What do you think, Clive, about that?
Um,
That
you
seems
know,
too low, £1.50, $1.50.
yeah, I don't really know anything about it, but I do as far as owning companies which mine silver as a byproduct. I think that's a good diversification because you get the main product, which is how they make their money, and if silver soars, they'll make it. The price of the companies which have got silver as a byproduct will also go up. So I'm quite happy with that type of company.
Yeah, so I've got an article here. Let's see. Because I said something about 18, 17 dollars per ounce. So this is from 2019. So it says here, what did depends silver production costs? For example, one company saw all-in sustainable costs above 15 dollars an ounce. I don't know. And this is from 2019, this article. So there's nothing here about $1.50. Okay, so what are the silver production costs? How can we use them in investing? The all-in sustainable costs are about 12.30 in 2019. About it means that yeah. So I'm not sure where he gets this $1.50 from.
I mean,
Uh,
I look at the a site called the Silver, I think it's called the Silver Institute, which has
yeah,
the supply and demand for silver. And when you study that, you'll see that the demand, which is coming from photovoltaic, automotive, electronics, and those sort of things, is increasing. The supply is less than it was 10 years ago. It has fallen. It's increasing slightly in the last year or two, but the supply is less than is being used in industry, and the difference is coming out of unhoarding or dishoarding, where people are taking their knives and forks and candlesticks and coins back to be melted down. Um, and what obviously to encourage people to bring their silver back to the pawnbrokers to be melted, the silver price has been drifting higher over the last few years. I don't see any sign of that changing in the near future. Perhaps the production will go up a little bit, but it looks like the demand side is rising faster.
yeah. There's a super chat here from Dajo Baradawaja. Thank you for that. Minimum gold silver ratio required to survive 12 months after reset. I'm not sure I understand that question. I mean, um, I think you can survive the reset by either having gold or silver, but I think in the reset, I think the price of gold and silver will go up significantly, and I think that the gold silver ratio will drop because usually silver outperforms in a bull market. Do you understand that question, Clive?
It wasn't a very clear question, but if we go back to the hyperinflations of in the Weimar Republic, then you only needed a few gold coins to buy a house.
Yeah,
So gold and silver went a very long way. And
yeah,
people, why were people selling their houses for a few gold coins? Because they couldn't eat. So they to get currency, which was gold or silver, well, because obviously the paper was worthless, you couldn't buy anything with it. To get currency, they were willing to sell their homes for a few coins, which they could then spend to get food.
yeah, and I think in the hyperinflation though, um, gold outperforms silver because silver is a bit bulkier, it's not as easy to move around with it. So, but who knows what will happen next time if we have, when we have this kind of collapse reset. Um, See if you got any more questions here.
Yeah, I saw a question there from one of your readers. He asked if I knew who um, Otto Niemeyer was, or something like that.
Otto Niemeyer.
I don't know much about him. I know I think he was knighted at some point. I think he was Sir Otto Niemeyer, who's a German,
Oh, he
and I
was a
think
banker, wasn't he?
yeah, he worked for the Bank of England, and I think he ended up with the IMF or the World Bank or
Oh yeah, British.
something like that. But I
Yeah,
don't know much about him. I don't know why the question was asked actually.
yeah. Let's see here. I brought him up
And we're
here.
talking about 100 years ago now.
Yeah, Sir Otto Ernst Niemeyer, 1883-97, a British banker and civil servant. He served as director of the Bank of England and BIS as well. Um,
Okay.
it's strange. There's a Brazilian. He was a famous architect. His name is Oscar Niemeyer. So I'm not sure if they're related, but the interesting thing about the BIS is when we sold our house the last time in 2015, we had someone come view it, and he came with his wife, really nice guy, and he said, "Oh, we're coming back from Basel. We lived in Basel for a few years." And I said, "Oh, were you working for the Bank for International Settlements?" I just guessed it like that because it's not a really big banking place. And he said, "Oh yeah, how did you know?" He said, "I was there, seconded there by the Bank of England. So most of the people that work at the BIS, they really work for the central banks, and they sent them there. And he was coming back, and he actually needed to take a pretty big mortgage, which I thought was ironic. A guy working for the Bank of England, but even they have to take a mortgage.
Yeah, I think it's a pretty cushy job to get a posting out to the Bank of International Settlements.
Yeah, no tax. I don't think they pay. Uh,
Probably not.
yeah, Chris Conman, thank you for your super chat. After the monetary system resets, how do we get rid of fractional reserve banking? What's the best alternative? Thanks. Clive, let you
Well, first of all, what is fractional reserve banking? It's the situation when if you have $100 and you put it in your bank is going to then lend 95 of those dollars out to some other oik, who will then do whatever he does with it, and whoever gets that money off him will put the money in the bank. Let's call it $90, and then they'll lend out $85 of that, and then that will go around in the system, and someone will put it back in the bank, and the next guy will they'll lend out $70 of the money, and so it goes on. So the result is for every $100 you put in the bank, every £100 you put in the bank, it's multiplied by tenfold, which basically means that if you have a deposit in the bank, they don't have the money to repay you because it's gone around the system 10 times. It would take a long time to unwind that. And that's why we sometimes have bank runs, because people get worried about a bank's reserves and they all queue up at the bank at the same time. And the bank can't repay them and they shut the doors, just as we saw happen with Northern Rock and Silicon Valley Bank more recently. Um, Now, how can we get rid of fractional reserve banking? It's kind of been there ever since the bankers realized that in general, most people don't come to get their money all at the same time, and therefore they can make a bit of money by lending out your money to somebody else, knowing full well that not everybody's going to turn up on the same day. Um, should we get rid of it? Can we get rid of it? Is there any point? I don't think there's any way of getting rid of it. The bankers will always do it. The minute but after a crisis, when there's been a lot of runs on the bank, they'll do it less than they will do it in normal times like now. So right now, the fractional reserve banking will be at a very high level, and the money will go around multiple times. But if we have a run on the banks such as we had in 2008, the number of times your money will be lent out will be somewhat reduced because the banks will need to keep more reserves. But I don't think you get rid of it. I just think that's in the nature of bankers to lend your money.
Yeah, I think yeah, you could argue it's fraudulent because you're lending something that isn't there, and that maybe the government should regulate it more closely. But the problem is the bankers have the money and the politicians need the money, so they will always allow that to happen. I think one way to uh like stop some of it or most of it is to teach people how the system works and the fact that they do that with your money. So, maybe people will start demanding, I want a bank that will only lend my money when I ask them to lend my money, and they won't do fractional reserve, and they're going to have to prove that they don't. So, but I agree with Clive. Unfortunately, they've been doing that since time immemorial because, like you said, people. It started with the goldsmiths. They started lending the gold, and then people also who had a lot of money, gold or silver, they would ask them to safekeep them for them, and they'd give them a receipt. But like you said, people didn't come every day to get their money out, so they would lend it out for a week, a little bit of that money, or they wouldn't lend the money, but they would write a note and with no backing. Uh, Peter Brunsgaard, thank you for your super chat. Physical gold and silver versus gold and silver miner ETFs. Uh, do you want to answer that first,
Yep.
Clive?
Look, I think diversification is a great thing. You can only keep so much silver or gold under your pillow. It's risky if you have too much. And then after a certain point, you've got to put the excess into a bank vault. And beyond that, you're probably better off having certificated gold via your ETF or your gold miner or a gold ETF. Now, I know there's a strong argument that if you have gold in an ETF, it's not really your gold. Just they say, it's if you haven't got it physically, it's not yours, and the government could confiscate it very easily. But beyond a certain point, you don't really have a choice. So I'm one for diversification. You have a bit at home, you have a bit locked away in the bank, physical, and then you have if you have more money than that is safe to keep around, put the rest into the financial system, and you have to take the risk and pray that you're not going to find your gold is confiscated or unmovable or can't be collected. If you've read the book The Great Taking, you'll have seen there is a risk that you find wake up one day and you suddenly find the assets that you thought were yours, they're not on your bank's balance sheet. You suddenly can't get them because your bank has somehow hypothecated them to somebody else. It could happen, but at a certain level of wealth, you have no choice. But if you're a small guy and you've got a few £100, I would just basically buy some gold coins and keep it at home.
Yeah, so yeah, if you have quite a bit or not that much, or even other valuables, look at the Dirty Man Safe, who I'm affiliated with. You can use Maneko 10 promo code and you get 10% off. And I think they're providing some kind of gift right now if you buy the Dirty Man Safe. All the details are below in the description. I'll try to chime in on that question. Uh, as far as yeah, I would try to avoid gold and silver ETFs as much as possible. But like Clive said, if you have tens of millions of dollars, you might want to buy a little bit of the
I
ETF.
wish.
But the thing is, um, the other thing, if you believe, like I do, that gold and silver are a way of trying to defeat the bankers, by buying a lot of ETFs, you're playing right into their hands because, uh, unless you've got loads of money, and even if you have a 20 million in GLD, it's they will just totally discourage you from taking delivery. So it allows them to keep the paper game going, ETFs. But uh, I guess the other ETFs you could consider are the mining ETFs. For that's okay, but don't forget ETF is a derivative. You don't really own Newmont or the miners. You own a promise from the whoever issues that ETF. That's what I would say. Clive, there's a question here, and this is you having been a wealth manager. What to do with 50,000 pounds? Bob JS is asking.
Well, one thing I like to do is talk to people about what they have, how old they are, what their job is, how much they earn, what other assets they have, what their aspirations are. It's very difficult to give an answer in the cold, but I'm going to assume that the person who's asking this question is perhaps in his early 30s. He's probably got his own home, and he probably has a good job if he's got £50,000. And so this is probably excess savings over a few years, and he's probably got a mortgage. So the question is, what should he do with the £50,000? Should he put it to work, reduce his mortgage maybe, or just keep it in cash? First of all, I would not keep it in cash. Bad move. Your cash is going to, at some point in the distant future, maybe near future, become worth very little, certainly a lot less. The buying power of your cash is going down day by day as the government borrows more and prints more. So I would not keep it in cash. Um, I would, as a first instance, look at things that you might need to spend your money on in the future and wonder if you could accelerate those spending. For example, home improvements or buying some furniture or an exercise machine or something that you might need in the future. The Christmas presents for your friends or your children next year. Uh, and then from an investment point of view, um, it probably makes sense to be as diversified as you can. And in that respect, I would certainly consider a mixture of tangible assets, and that would include equities. My recommended allocation for equities is about 60%. Now, that's not really a recommendation. It's kind of for the average person, 60% in equities. I'd probably have 6 to 12% in gold and silver. I'd probably have a some percentage exposed to real estate investment trusts, and I'd keep the rest in cash for emergencies. That's what I'd do.
Yeah. Well, yeah, just going back to Peter about the ETFs, he was not referring to GLD or SOV, just the miners. Yeah, the miners ETF are fine, I think. The other thing you can do, Peter, if you don't want to buy the ETF, you go to the ETF prospectus and you look at their holdings, and then you could go and buy each, each individual holding, or maybe the top five holdings, maybe by but the top three, the middle three, and the bottom three. So you could like by buying each individual share or stock, you could kind of replicate the ETF by not buying the ETF. That's what I've done in the past. Uh, yeah. Let's see if we got any more. Well, someone mentioned here Bitcoin, Clive. I know you follow Bitcoin more than I do. Do you want to chime in on Bitcoin? I know I
Sure,
don't talk much about it, but I'll let you.
sure. First of all, I don't want to detract a little bit from the subject matter of your favorite topic of gold and silver, but uh, something has been going on in the Bitcoin market in the last few weeks. About 3 weeks ago, there about 12 Bitcoin ETFs were granted approval in the United States. This is the first time in Bitcoin's history that a US ETF exchange traded fund has been allowed. And they granted approval, I think 10 or 12 of them. And those funds have all opened up trading, meaning people can now, who are the average Joe, without the complications of owning Bitcoin, without going through any complicated offshore exchange or anything complicated, can now actually participate in the rise in Bitcoin. And it started off with a bit of a slow start because on the first day of trading and the days which followed, Bitcoin plunged by 20%. And the reason for that was many people had invested in Bitcoin ahead of the ETF approval, hoping for the approval because it wasn't guaranteed. And when it was approved, whilst there's money flowing into the Bitcoin trusts, the number of speculators far outweighed the money going in, and the price of Bitcoin really plunged. It went from about 50,000, just 48,000, down to about $39,000. So it was a 20% decline. But what we've seen in the recent week or 2 weeks, is the amount of money flowing into the Bitcoin ETFs has been increasing. Uh, Now, to put that in perspective, Bitcoin has about 900 Bitcoins mined per day. It's exactly 900 Bitcoins per day are mined. And that will go through a halvening, as they call it, in about 60 days when it will drop to 450 Bitcoins per day. But the amount of Bitcoins going into the ETFs, which are being bought by the ETFs, is 10 times that. So roughly 9,000 Bitcoins are being bought per day by the ETFs at the moment. And what that's resulting in is a generalized rise in the Bitcoin price. And the sellers of those Bitcoins, of course, are the long-term holders who are quite sticky bunch. They're not really going to sell unless they see higher prices. So that's what's going on at the moment. But of course, there's many things which could go wrong. And I don't want to say that it's about to go wrong. It's not a forecast, but right now the cash flow is into Bitcoin, and that's why people have taken their eyes off gold for a while. But at some point, the tide will definitely turn.
And do you know if these ETFs they're 100% backed? I mean, do they really go and buy the Bitcoin and put it like in a Bitcoin, their own wallet, or
Yeah, they're 100% backed by Bitcoin. But in most cases they're using a custodian to do that, which is Coinbase. Which I perhaps I'll stress here where the risk lies. One of the biggest risks is if there were a hack of one of these company ETFs wallets or Coinbase's wallet, who's holding the Bitcoin on their behalf, all hell would break loose and Bitcoin would be down 50% in the wink of an eye.
and the other thing I would say, I don't trust any of these exchanges. I've had accounts with Coinbase and others, and the other thing I saw the other day is that George Osborne, who is the Chancellor of the Exchequer in the UK, he's become a director of Coinbase. I'm not trying to, you know, put uh, Bitcoin down or anything, but yeah, that's concerning that they don't really hold the Bitcoin in a hard wallet, but that's a different thing.
Mm.
And the I was going to say something else about Bitcoin here, but yeah.
Well, I mean,
Oh,
I think the
yeah,
other thing to
I
say
was
about
wondering, Clive, can you take delivery of the Bitcoin if you buy the ETF?
no, the SEC has forbidden that. They basically said only authorized dealers can put
Yeah,
Bitcoin into the ETFs
yeah,
or take it
yeah.
out,
That's
and
why
that's not you and me.
that's why I don't trust these ETFs because I think what they're trying to do actually is get people to stay away from buying real Bitcoin. But some people will argue that gold went up because of the GLD creation. I personally don't think it was the most important thing. But anyway, at least we looked at Bitcoin, which we usually don't. So we're trading what 51,800. It's still way below its all-time high though of what 60.
Well, if the flows continue the way they have been going in the last 2 weeks, and by the way, the amounts going into the Bitcoin ETFs over the last 2 weeks has been gradually increasing. If that continues, uh, unless there's a major seller appears, and there are some sellers on the horizon, by the way, which I can mention, such as the Mt. Gox sellers, such as the confiscated Bitcoin by the US SEC, and there's various sellers which could be big sellers out there. But if there's no sellers appearing, with the flows which are going into the ETFs, the Bitcoin price will drive well past the all-time high and very quickly.
William PMCD, can you please comment why you don't like Coinbase? I don't mean I don't like Coinbase in particular. What I mean is that I've had Bitcoin before years ago and all other cryptos, and unless I have to exchange it for another crypto or for fiat, I always kept my Bitcoin or cryptos in the proper wallet, like not with an exchange, because I don't know if you remember, there's that Mount Gox exchange. People lost hundreds of millions of dollars. So these exchanges are, look at FTX. That was an exchange, and you can never. An exchange is not the same as a wallet. And one of the reasons Bitcoin was created was to eliminate the counterparty risk, to eliminate the middleman. So with the with the ETF, you're going to get two middlemen. You get the BlackRock, who issues the ETF, and then you're going to get Coinbase. So that's why I don't like that. It's not that I don't like Coinbase in particular. I just think it's dangerous.
Yeah, I mean, if the old adage of "not your coins, not your keys" is Bitcoin's motto. Um, so, anyone who is serious about owning Bitcoin for its original reasons, the reason it was originally created, should get their own personal wallet and buy their Bitcoin the hard way. But those who can't be bothered, well, of course, the ETFs make it very easy.
Yeah, that's
It's
right.
democratized. It's a bit like when Robin Hood came out. Everybody can suddenly buy stocks, and stocks went up forever and ever.
Yeah.
And now suddenly Bitcoin's available to the man in the street when it wasn't before.
I mean, it was available to the man on the street before you could, but I think people don't want to do the work these days.
That's
They,
it.
we-
They
they
want it easy.
Yeah, they will even forget why there was a Bitcoin. They just buying it because, yeah, they don't look into it. So, yeah, it's 10 o'clock here. Just one more question and then we'll call it a day. If anyone wants to ask another question, I probably have missed some questions. There's quite a few of you here. Let me just scroll back, see if there's anything. I mean, Clive is. Uh,
Someone here wants to go and live in a caravan in Skegness. That sounds lovely.
Live in a caravan in Skegness.
That's what he's wanting to do.
Yeah.
I don't know
Well,
why.
I saw someone on TikTok, this American lady, she's 36, and she said, I'm divorced. I'm worth $5 million. And she said it not to brag, but she said, I sold my house and I bought a van and I'm living in a van and I'm really happy and I'm driving. I go to different places all the time. So yeah, you should do what makes you feel good. Yeah, that's interesting. So Clive, any final thoughts for the viewers?
I've got nothing special other than to say that you're welcome to connect with me on LinkedIn. I have a lot of contacts. People do ask me questions all the time about different things. So for example, they've received an inheritance or they're having a dispute with their neighbor, all kinds of weird things. And I'm very happy to give you my opinion or give them my opinion when they ask me on LinkedIn. It's the only way to get in touch with me. I don't really do Twitter or
Yeah,
X, as it's now called, or anything like that. And
yeah,
certainly not Facebook.
yeah. I have what's that? I have that Bitcoin wallet is quite famous. Um,
Trust Wallet.
no, it's another one. I think it's from
Ledger.
no, I forgot, but I haven't really used it. But yeah, I recommend,
Okay.
I'm not pushing Bitcoin at all, but if people are gonna look into Bitcoin, I would do it through, yeah, go to the exchange and buy Bitcoin from Coinbase. Cut out Larry Fink, you know.
Yep. And then after
Why
you've
you
bought it, download it to your
yeah.
personal wallet on your phone or on a ledger.
I think maybe it's because in the US it's really hard now to go into exchanges and buy Bitcoin. Is that what it is?
No, it's if you use in America, I'm sure you could use Coinbase. I guess there's a few others too.
It's really easy. I mean, it's really easy to have a Bitcoin wallet. Bitcoin.info, I
I mean,
think.
here in Switzerland, it's as easy as pie. You go to the Apple Store, you download a Bitcoin wallet of your choice. Doesn't
Yeah.
matter which one. I would say Trust Wallet might be. Then you go to any ticket machine. That's a railway ticket machine, and you choose other tickets. And under other tickets, you've got a choice which is called Bitcoin. Then you put your money in the slot, hold your phone under the railway ticket machine, and your Bitcoins in your telephone.
All right. Thank you, everyone. Thank you, Clive, and I wish you all a great week, and we'll talk soon.
Thank you, Mary. Have a lovely evening.